Imagine making money while the world sleeps. Imagine if a tiny shift in numbers, so small, most people don't even notice, it could mean hundreds, even thousands of dollars in your pocket. That tiny shift exists in Forex trading, and it's called a pip. Welcome to Forex Trading Rocket, your ultimate guide to mastering Forex trading one step at a time. Today, we're diving deep into the world of pips, and by the end of this video, you'll understand exactly what a pip is, why it's so important, and how you can use it to boost your trading results. Before we go any further, if you're new here, make sure to hit that like button, subscribe to Forex Trading Rocket, and turn on notifications so you never miss our latest tips and signals. Trust me, you don't want to miss what we have in store today. Let's start simple. A pip, or price interest point, is the smallest movement in most currency pairs in Forex trading. Think of it as the tiniest ripple on the surface of a huge ocean. Even though it seems small, in Forex, that tiny ripple can grow into big waves of profit. Usually, a pip is represented by the fourth decimal place in a currency pair. For example, if your USD moves from 1.1050 to 1.1051, that's a 1 pip movement. It seems tiny, right? But imagine trading large volumes. That 1 pip can suddenly turn into a significant gain or loss if you're not careful. Now, let's talk about why pips are so crucial. In Forex, everything is measured in pips. Your profits, your losses, your risk, even the distance between your entry and exit points, all of it is measured in pips. They act as a common language for traders all over the world. Once you understand pips, you can measure, calculate, and strategize your trades with precision. It's the foundation of smart trading, and it's what separates beginners from professionals. You might be wondering, how do I calculate pips? Don't worry, it's simpler than it sounds. Let's take an example. Suppose EUR/USD moves from 1.2000 to 1.2005. The difference is 0.0005, which equals 5 pips. That's all there is to it. In FU trade, USD/JPY. Pips are slightly different because of the way the Japanese yen is quoted, but the principle remains the same. Pips are the measuring stick of the Forex world. Understanding pip value is the next step. Not all pips are created equal. Their value depends on the size of your trade, which we call the lot size. A standard lot is 100,000 units of a currency, a mini lot is 10,000 units, and a micro lot is 1,000 units. So, in a standard lot, each pip is worth roughly $10. In a mini lot, 1 pip equals about $1, and in a micro lot, just 10 cents. Knowing pip value is essential because it allows you to calculate exactly how much you're re-risking and how much you can potentially gain. Now, here's where it gets exciting. Once you understand pips and pip value, you can start applying this knowledge to your trading strategy. For example, you can set stop losses and take profits based on pips. If you set a stop loss at 20 pips and a take profit at 40 pips, you're recreating a strategy with a risk-to-reward ratio of 1:2. That's as powerful because it helps you control your risk while aiming for higher rewards. And trust me, once you start thinking in pips, trading becomes less about guessing and more about calculating, planning, and executing. Let's dive a bit deeper into real-life scenarios. Imagine you bought your USD at 1.1000. The market moves in your favor, and you sell at 1.1050. That's a 50 pip gain. If you traded one standard lot, that's $500 profit. And if you scale that strategy with proper risk management, your earnings can grow consistently over time. That's SY understanding pips ISNT optional. SES, essential for anyone serious about Forex trading. It's also important to understand that pips are not just for profit, they read for risk management too. Smart traders always calculate how many pips they are willing to risk before entering a trade. This way, even if the market moves against them, they have a clear exit strategy. Without this, trading becomes gambling, and no one wants that. At Forex Trading Rocket, we believe in trading with precision, strategy, and confidence and understanding. Pips is the first step. Now, let's talk about psychology. When you know your pips, your mindset changes. Every small movement matters, and you learn patience, discipline, and control. You stop chasing the market blindly because you have a measurable way to evaluate every trade. This is the difference between an amateur trader who constantly worries and a professional trader who plans and executes. Another tip is to always use pip calculators, especially if you trade multiple currency pairs. Pip calculators take the guesswork out of trading by automatically showing you the pip value, risk, and potential reward based on your trade size. This simple tool can save you from costly mistakes and help you stay consistent. Consistency is what grows your account steadily over time. And here's something most beginners miss. They ignore fractional pips or a pipette is 1/10 of a pip. For large trades, even these tiny fractions can add up to significant profits or losses. So always pay attention, even to the smallest movements. Every decimal counts in Forex trading, and mastering pips means mastering the language of the market. By now, you might be asking, how do I start using pips in my strategy? It's simple. First, choose your currency pair. Second, decide your lot size and calculate pip value. Third, set your stop loss and take profit in pips. Fourth, track every pip movement and review your trades. The more you practice, the more intuitive it becomes. And remember, patience is key. The market won't move in your favor every day, but with the right pip strategy, you can make steady, reliable progress. At Forex Trading Rocket, we emphasize learning by doing. So, don't just watch videos, open a demo account, practice calculating pips, placing trades, and tracking your results. You'll see how small pips can lead to real, tangible profits. It's like planting seeds today that grow into a forest of opportunity tomorrow. Before we wrap up, I want to leave you with a few practical tips. Always know the pip value before entering a trade. Always plan your trades using stop loss and take profit in pips. And always review your trades to understand what worked and what didn't. By consistently focusing on pips, you're training yourself to think like a professional trader. If you found this video helpful, make sure to comment below and tell us which currency pair you want us to break down next. Share this video with friends who are getting started in Forex so they can also learn the power of pips. Every comment and share helps us create more content for you and keeps the Forex Trading Rocket community growing stronger. Remember, Forex trading is not about luck, it's about knowledge, strategy, and execution. Pips are your foundation, your guide, and your measuring stick. Master them, and you're already ahead of most traders in the market. Thank you for watching. Stay consistent, stay disciplined, and keep trading smart. Sleuth. Until next time, keep watching, keep learning, and keep growing with Forex Trading Rocket.